Hi, this is Randy Finney with Right Side of the Chart, and today's Thursday, May 17th, 2018. In this video, I want to take a look at commodities, various commodities via the tracking ETNs. Any official trade ideas that I use, I'll always try to take a look at the actual commodities or the futures contracts on those commodities to confirm. Most commodity tracking ETNs do a good job, some better than others. And in this video, we'll keep it short. I know the majority of traders out there prefer ETNs. They don't have futures accounts. So that's why I'll go over these ETNs. And again, most do a good job of mirroring their underlying commodities. Now, before I get any further, let me make clear that as we go through this list of the commodity ETNs that I have, some of those commodity ETNs directly track the underlying commodity by investing in futures contracts, whereas others are an indirect play on the underlying commodities, such as lit. I'm starting out here because this is an active trade idea. It's a Global X Lithium ETF. And like some of these commodity ETNs, instead of tracking the direct commodity via futures contracts, it's an indirect play as they invest in companies that are involved in that sector. So, for example, with lit, you have the battery makers or lithium distributors or manufacturers, maybe those pulling lithium out of the ground, those type companies, and and there's a couple others, and I'll try to get to that in a second here. So let's start out here since this is an active trade. Lots of lines. I'm going to zoom in before I do. The bigger picture on lithium, we had this long-term trend line. It actually goes back to the left of the chart, and that was quite bearish when that trend line broke. Lithium, or this ETF, at least LIT, peaked with this divergent high back here, broke down, back tested, and has been moving lower. So what we were doing here is playing a counter trend rally. The longer term outlook remains bearish based on the scope of this trend line. And again, that goes back, you can see here, all the way back to 2015, the lows in 2015. There's that trend line looking on a 4-year chart. So let's get back to this daily chart. And, so far, or at least at this point in time, and since the entry here at about 33 at 33.20, I view this as a counter trend trade, and so far so good. And I wanted to update it because today we broke above T1. Now T1 was the first target was 34.48, and as always, I set my targets on long side trades. I'll set them below the actual resistance level. So I had resistance there at 34.53. That was a resistance level, as you can see some reactions there. So we powered up through there today, and this is an impulsive move. We're up 2%. Nice green candle. So what that does, it helps open the door for a move up to this second target here, second final target, which is set at 35.98. This is a resistance zone. So what I've done is set that target just below the bottom of that resistance zone there, which comes in around 36.33. And I do that to help avoid, minimize the chance of missing a fill if a lot of eyes are watching that level as a resistance level. I think that lithium can continue on up here. If you want to raise stops or trail stops, I do think it'll make its way up to that $37 level. That's actually at 37.11, that line there, but we'll call it 37. That is a pretty significant resistance. So I just wanted to share that for those of you in the trade. And again, the basis behind that trade, or this trade, was this bullish falling wedge here, divergent low. We're seeing the PPO start to get above that zero line. That's bullish. Most of you know, if you followed me for a while, I use that as a trend indicator. You can see how well it works. So going back here, I'm going to highlight this. The signal line, this 9 EMA, the white line, was above zero, and most importantly, or as importantly, I should say, that zero line often acts as support on pullbacks when the trend is bullish. So it told you, stay long throughout this uptrend. It was bearish here, but now we're playing a bear market rally, what I think is a counter trend trade. But as of now, that line has crossed above there. That's bullish. So that could give us some more room. It may tell us that, hey, lithium might want to go on and back test that trend line, or who knows, could even head on to new highs. Either way, I like what I see in this chart right now. And if you're in that trade, you might want to, at this point, since T1's already been hit and taken out, consider raising your stops. But again, I'll leave this stop as the official stop now, 32.39, because that is based, I calculate my stops based on the final target, um, And I also look at, support levels, and then I try to apply at least a 3-to-1 or better risk reward ratio. So therefore, that stop remains in place for those that are targeting T2. But it's, as always, it's up to you if you want to raise stops at this point to either break even, or maybe to protect your gains. Okay, moving on to the next one. This is JJOFF. A lot of the iPath ETNs recently changed their ticker symbols. This used to be the old JO, and they changed it to JJOFF. So this is an active trade, and this is our stop level here. So far, by the skin of our teeth, it looks like we've avoided a stop, and I like it. I still like this trade. So what we're looking at, and the basis for this trade was this breakout above this bullish falling wedge. You can see the downtrend line well defined, divergent low right there, bullish divergences, an impulsive breakout, and so far, essentially all we had is a back test. In hindsight, if I knew we would get a back test, sometimes you get back tests of wedges when they break out. And so far, that's been the case here. So you can see the back test of the wedge. It was successful, and today we have a green candle so far. Price is moving up. So the ideal scenario would be, a resumption of the uptrend following this back test. And all right, I just had a price alert for those of you in GE. Looks like T2 was just hit. So I'll try to get a post out on that as soon as possible. Um, all right, so that's that. It looks good for now. Stop remains there. I think it was any move below 1379. You might want to give it a daily close below 1379. We've had quite a few more than usual. Some trades like I'll get to in a second here. I think NIB was one of the recent ones that just barely had the stop run and then went on to play out as expected. So again, everything on the site, the price targets, the trade ideas, the stops, they're all suggested based on, the chart that I'm looking at, how I trade. And of course, you can trade according to your own trading style and stop allowances and things like that. Next one up is Cole, KOL. This is the Van Eck Vectors Coal ETF. This is another one that doesn't, it's not a direct play on coal prices, if I recall. I believe this has everything from railroad stocks that move the coal on coal cars to mining companies, things like that, that pull the coal out of the ground. Story on this one, you can see pretty clear pattern of divergent highs and divergent lows. Most recently, we had this divergent low right here. You can see the bullish divergences, and it's starting to play out. There's a resistance level there, 1725. So maybe that's where we're going up to here. But that does come on the wake of this divergent high, which triggered that correction. We had a divergent high here. It led to a small correction and a divergent high here. So that's coal. I don't really, I probably shouldn't spend a lot of time on it. There's not enough meat on the bone on the upside. I believe this was covered in recent videos with the divergent low, but I'm not sure. I'm not in this, nor is it an official trade. But if you are, that's where you might look for, a reaction there around 1725 if it gets there. SGGFF. This is the old SGG, which was Sugar ETN, still is. They just, again, they changed its iPath. They added a bunch of F's to the end of their ticker symbols, changed things around a little bit. But fortunately, they kept the same chart history, which is nice. Some of these, a couple of them, I think they didn't do that, so then you have to start over. So this again is the old SGG. If you're referencing any of the previous posts on sugar on the website, that's what you'll see. It's looking pretty good. You have this divergent low here. You have a downtrend line. Prices look like they're starting to break above that downtrend line. I need to tighten that up a little. This is what it should look like right here. You can see, try to capture a lot of these reaction highs. So this is a potential breakout, and I may add this one as an official trade idea. And whether I do or don't, you can see my levels. This is the first resistance around 26.27. This must have been an official trade before I had these targets here. I don't see T1, but either way, those are adjusted levels. If it says T2 or T3, it means I've taken the actual resistance level, in this case 30.32, and I've tempered that down or reduced that number. That's about 10 cents below that line that it's sitting above, to provide for an optimal fill. And I'll tell you, if sugar can get some traction, I think a longer term swing target, um, would be right here. That line's at about 31.90, that green line I just added there. So I'll revisit. And again, I want to take a look at sugar futures. Sometimes the ETNs can drift a little from the charts of the actual underlying commodity or the futures contract. And so I will take a look at that before making this an official trade idea if I decide to do so. OILNF, another symbol change. This is the old OIL, which is, as the name implies, this does track crude prices directly, West Texas Intermediate, if I'm not mistaken. There it is. Crude prices are what they are. I've talked about a lot about this in the trading room. This has been an extremely resilient trend. We tried to catch one top recently, got in a little too early, and was stopped out. So we were wrong on that one. In my book, there's two things. You can be early or wrong. Being early on a trade means you go underwater a little bit, but you're not stopped out. The trade goes on to play out successfully. In this case, I was wrong because we had our stop taken out. So, but that in no way means that I'm going to back off. I'm watching oil closely. It's been a resilient trend, but nothing lasts forever. Divergences are still in place. So I think this oil and the energy sector is setting up for a very nice, lucrative swing short. And so we'll keep an eye closely. USO, I think it was a little more liquidity. Same thing. This tracks West Texas Intermediate, but it also tracks various types of crude products like heating oil and some other refined products that are derivatives of crude. So obviously it'll track crude prices, so virtually in lockstep there. It's the same story. That's it. That was the last. I used DWT as the official trade idea, but I gave you, for those trading USO, some stop parameters. So there we were taken out for a relatively small loss, around 1409. That's where the stop was suggested on there. You can see we had a level of resistance there where USO was tapping up, but it took it out. One little fake out move, and now it's above that level. So if you're looking for any bearish technical developments on USO, I would look for the next move back down below that level there. That we'll call it, to be safe, say a little maybe below $14. I could actually put a little bit lower trend line that might even come in below 14, right around there. That would be one potential bearish development, but you also may want to look for some big bearish engulfing candle, some type of bearish candlestick reversal pattern, ideally a multi-day pattern, not just one single bearish candle, but a bearish candlestick followed by two or three confirming candles. All right, let's move on. SGGB. This is the old SGG. Like I said, a lot of name changes. This is Barclays. Whatever reason, they decided to slap a B at the end of the old SGG. And yeah, this one you can see can't go back. Whatever when they did that symbol change, it was effective. Looks like back here in January, and so you don't have enough charting history. I'm going to move on. I'll look at sugar futures and the other sugar ETF that I already covered, SGGFF. We already covered that one, so this one, don't even bother trying to chart it. There's not enough price history. JJGTF, the old JJG, they added a TF to the end. Again, this is from iPath for whatever reasons they had to do that. I just want to point that out. If you'd like to look at old previous charts on the site, it's going to be under the symbol JJG. And this one, it's gotten ahead of itself. I mean, we were long. This was an official trade idea, either official or unofficial. I think it was official. Yeah, if I made these notes, we gapped up, it was hit. So we milked the bulk of that run. And at this point here, this recent high was a divergent high. You can see the negative divergence in place. You have an uptrend line here. We are at uptrend line support right now. So we're going to do one of two things most likely. We're either going to bounce here, maybe get another thrust up within this wedge, or we could break down. If we break down, if you're long JJG or JJG TF, then you may want to consider a stop not too far below that trend line. There's also a support level there below the first or the former T1 first target level. But either way, I don't like the divergences. The PPO is above the zero lines, and that is bullish. So what you may see, we could successfully defend it. That's done a good job of defining trends, and we could go on and burn through those divergences. I am longer term bullish on a lot of these ag commodities and commodities in general, but right now, we're out of this trade. So if you're in it and you have any other questions, anything I didn't cover, that's it. I just wanted to point out that we are at a pretty important support level. So maybe a bounce here first, at least. I favor that, but I wouldn't go long. It's just not worth it in my opinion. This one's cotton. It used to be BAL, now it's BALTF. And that looks to me like a nice big fat bearish rising wedge confirmed with negative divergence. PPO recently crossed down, made a bearish cross confirming that divergence. So this one is a potential short setup, and I could say this just looking, eyeballing this chart. My minimum target would be right there around 53. Not a huge gain from where we're at now. It's about 6%. But I think there's a pretty good shot if it cracks below this trend line that it gets there. And we're really about at the point where that wedge is going to break sooner or later, if it's going to break down at all. But again, I'd have to confirm the charts of spot prices on cotton or the cotton futures. All right, next up, wheat. Wheat is part of JJG or JJGFF now, whatever the or JJ, whatever TF, whatever they added onto that one. That one's comprised. The grain ETN is comprised of wheat, corn, and soybeans. So this is wheat. Therefore, that chart's going to look very similar. Same story. These targets were hit. There's a potential third target zone. However, we put in a divergent high, and that has so far been playing out for a pullback or a correction. There may be more downside to come. That's a divergent high on the daily chart, just like we had a divergent low here, a divergent low there, which led to this swing trade that we had. So that's it. We can power through these divergences. This PPO is trading above the zero line. So maybe we just get a little correction out of this divergent high, which we've already had so far. And we may get another objective entry if we happen to fall all the way back here to 612 and the charts confirm. May go back into this one as a long trade idea. UGA is unleaded gasoline. And this is going to track crude prices very similar. Same story too, divergent high, a negative divergence. It's been in a strong uptrend along with crude. Sooner or later, this is going to have an impact on the economy. If I grab these crosshairs back in mid 2017, so just about a year ago, this is back in June, I'm just measuring, we've had in gas prices a 60% increase. Sooner or later, that's going to trickle into the economy. So one or two things have to give. Either oil starts coming back down or the stock market is going to start to throw a fit. All right, next up, a couple more and we're done. Soybeans, I pointed out in the last update, this symmetrical triangle, we've broken to the downside. I don't have a strong opinion on this chart, but I can't make a case to be long or short here, so let's just move on. DBA, this is an agricultural ETF, and there's the makeup of that, if you can see it here. Wheat's the largest component, corn, soybeans, but you have a little of everything, cattle, cocoa, sugar, coffee, lean hogs, feeder cattle, and cotton. And story on this one is this downtrend line. We need to take this downtrend line out. We had a divergent low back here, and that would be bullish. So again, the outlook, I think, and I do think it does get taken out sometime in 2018. You can see commodities have had a heck of a bear market, while stocks have had a heck of a bull market. So going forward, I think the risk reward is more favorable in a portfolio, or at least part of your portfolio, in commodities than it is in equities. And if nothing else, it's a good way to diversify and smooth out the bumps in your portfolio. But longer term, we need to take this trend line out. That would be a bullish sign. But as I just showed you, there's a whole basket of individual commodities in here. Some have absolutely no correlation, or some even have an inverse correlation to other. When grain prices go up, that's an expense to cattle farmers and hog farmers. They've got to feed their livestock. So those two tend to be inverse, and we'll get to that in a second here. Cane, it's another sugar ETN. There it is, nice downtrend line. I've adjusted this one recently. This is the trade we were stopped out on in sugar recently. But there's some potential here. If we make another low here soon, if we don't take out this trend line, we'll have positive divergence. You can see these indicators making higher highs while prices are poised. If we do take another thrust down, either way, watch for a break of that trend line. In fact, if I haven't already set an alert, oh no, we're above it. I just moved it. I think we just by a hair. And again, this is an ETN. I would want to confirm a breakout in sugar future prices, because that's where the big money is trading, and those are the actual more reflective of the commodity, of the underlying commodity than these ETNs. Although again, most of the ag ETNs do a pretty darn good job at tracking the underlying. Corn. Again, this is a component of JJG or JJGTF, whatever that new symbol is. Divergent high right there, right at resistance, 1850. Pretty significant resistance level. If you look to the left of the chart, where prices are, you can see a lot how well that worked as a support shelf right there. When that support was broken, boom, it triggered this downtrend. So support once broken becomes resistance, and that was a natural target for corn. We hit that level, and so far we've reversed. We had negative divergence in place, although the trend is still up. Now, sooner or later, like I said, commodities have been in a heck of a bear market. Sooner or later, we take out that resistance level. And just looking at this chart and knowing that commodities, unlike equities, commodities have a they don't go bankrupt. They're always going to be around. They're always going to be needed. There are supply and demand factors that come into play, but sooner or later, this bear market in corn and a lot of other commodities will be over. And I think, at the very least, the downside from this point is minimal, especially compared to the upside. I'm talking as a longer-term play. Um, all right, let's move on and cover. This is JJCTF. Used to be JJC. They added the TF. This is a copper sub-index. You can see here we had an uptrend line. Prices copper broke down, had very good support right here. This is a support zone, and it looks like it hit it briefly one day. I hit the bottom line there, top of the support zones right here. And you can see we moved down. So I don't know. That may be all that copper needed to correct off this divergent high and trend line break. But right now it's in a more of a bearish technical posture because it is below trend, and there's also quite a bit of resistance overhead, and you might want to just put a downtrend line. And again, you'd want to look at copper future prices to confirm, but I don't see a trade on that right now. I'm going to skip foil. It's aluminum ETNs, just too thinly traded. You can't even make heads or tails of that chart. JJUFF. This is aluminum. I don't see a lot there worth trading. LD too thin. This is lead. JJGB. Again, they renamed this one from JJB, or this is the old one actually. That's what it was, and you can see. So there's hardly any trading list history. It only goes back to January. So let's move on. CowTF, COWTF, the old Cow ETN. Now added the TF to the end. Story on this one, well, it broke this. This was a pretty significant support level, this yellow line. You can see all these reactions to the left here. Broke support, had a quick run down, caught support here at these reactions right there. That was a pretty well-defined support level. And so now it's bounced up. So this is a story on this one. It's going to go one of two ways. It is, or just recently ran into resistance. So it's in this trading zone now. Most of the trades have occurred in this box here. So it needs to break above there, but I'm not very optimistic that it will. You can see that the PPO is below the zero line and it's turning down right now, being rejected at this back test of the zero level. And it also failed there. So, if another thrust back up there, it would offer an objective short entry up around that level. I'll give you that number here. That's 2174, give or take, that yellow line. So you could always short it there with a stop not too far above and target this low again here. Or, if you want quick trades, target the bottom of that recent trading range. There's Cow, but I think there's better fish to fry out there right now. This one shouldn't even have been covered. GAZZF. I think that one this ETN must have blown up. It's only at a fraction of a penny now. Cut CUT. You guys probably know I'm watching lumber prices closely. Cut and wood are two ETNs. They are not a direct play on lumber prices. You can trade lumber futures. That's LB is the symbol. It trades on the CME. That's random length lumber, but cut and wood are timber and forestry companies. Obviously, their bottom line is affected by lumber prices, but not so much because lumber prices have gone nearly parabolic. They've exploded, and in large part that's due to tariffs that Trump slapped on, I think, as Canadian lumber. And so therefore, if you think about it this way, these companies aren't profiting from that rise in lumber prices as much because a big part of the increase are the tariffs, and the companies don't get that. That's So therefore, you can see that they've sort of stalled out. This would be a potential short right here on a break of this uptrend line. Longer term, you can see this price channel that it's been in off the 2016 lows or the primary uptrend line. It's also a price channel there. And we broke down, but it's sort of continued on higher while diverging as well. We have that negative divergence there. Trend indicators still bullish, at least by this metric, but again, watch for a break there. These would be your targets, at least your first two targets on cut. And then I also like wood. I actually think the chart on wood is a little more clear. Again, similar downtrend line or uptrend line goes back to early 2016. You can see it right there. We jump back to this chart. And so when we zoom in, we also have, although this is the primary uptrend line on wood, we have this minor uptrend line which could trigger a sell signal, and you can see how we've been dancing on it lately. So if I don't already have it, I might already have an alert. I'm going to set a price alert if that breaks, and we may add wood, but I'm got to see lumber prices roll over. They've been like crude. Actually, they've been even more resilient than crude lately, if that's easy to believe. UNG doesn't. That's one of the ETNs. Natural gas ETNs are probably the worst of the commodity tracking ETNs. They do attempt to track natural gas directly by trading futures, but they just don't do a good job of it. So let's just stay away from that. NIB, this is Cocoa. This was the one I mentioned recently with a brief stop raid right here. We had our stops clipped by just a hair right there, and it did go on to play out as expected by hitting the first target almost to the button the other day, and still looks bearish. You can see the negative divergence right there. We had a divergent high. I was just a little too aggressive with my stops on that one. But for those of you that held on, congratulations. Looks good. A couple trend lines we can look at, but this one right here, that's not it. Let me get rid of that. Tried to highlight this one here. This is a trend line that we may come and eventually tag right here. You can see it off the lows. And that if we fall sharply, that would come in roughly with T2, but we'd have to drop right away. I just wanted to point that out as potential support, but we haven't touched that trend line in a while. We need to see another reaction on it to help validate it. Otherwise, I'm looking for a continued move down here. Once this level goes, that T1 level was placed at 32.23, so call it a break of 32.20 or so, probably takes us down here to $30 or so in NIB. And that's it, guys. All right, that is my watch list of commodity tracking ETNs. And like I said, we have two active right now, lithium LIT and coffee JJOFF. And I'm on watch maybe for a long entry on sugar as well as a short entry on wood or anything else that stands out. I'll keep you guys posted. This has been Randy Finney with Right Side of the Chart. Hope you